Right, as we get ready for the trading day, quick update on how things are shaping up in the pre-market this morning. We have seen some softness for U.S. stocks. As we were saying earlier, there are some troubles in tech land with some pressure, particularly on names like Alphabet and AMD after their quarterly results. So right now, the NASDAQ 100 futures contract is up close to 0.8%. Let's also take a look at what's happening with the price of oil. Obviously, we've been watching it very closely amid these trade war concerns recently. WTI is taking a hit today, not just on the uncertainty surrounding tariffs, but also, a lot of people wondering about whether or not there is going to be an ability for U.S. President Donald Trump to be successful in ramping up economic pressure on OPEC nations. We'll be watching that story closely. WTI right now down about 1%. And let's take a look at the price of gold, which generally speaking has been in a good mood. That continues to be the case right now with more upside for bullion, up about 0.5%. We're back with Ryan Lewenza to talk a little bit more this hour about the story of today, but also the story of yesteryear, because, I do think that history is a good guide. Because we can get caught up in the noise. There's a lot of noise. We just talked about two of those big stories, but you're also looking at past performance in bull markets. What did you find?
Yeah, a good point about history. Sam Stovall, the old chief strategist from S&P, he always told me to look back in history when you're trying to predict the future. And so one of the reasons we're still bullish this year is that we think there's just more time to play out in this bull market. So on average, if you look back to World War II, the average bull length of the S&P bull markets has been about 5 years. Well, this year we marked the third year of this bull market. So we've got this great chart up here. And all I'm doing is I'm calculating the length of each bull market. And then you see the blue line there is the average. And so I grew up playing baseball. Okay, there's 9 innings in a ball game. I'd put us at about the 6th, maybe the 7th inning stretch. Where in the third year, the average is 5. I think there's a few more innings to go.
Interesting. And I guess at this stage of the bull market, because before the break we were talking about whether tech had gone too far. This comes up all the time here on BNN Bloomberg. How should you be positioning one's portfolio? If there's more bull market to come, which kinds of investments benefit the most, in your opinion?
Yeah, great question. So I would say a couple of points here. We are overweight the U.S. market. We still like that market, but we're not loading up on the S&P, for example, with the concentration of the tech stocks. And so we're trying to diversify and spread it out. So one area that we've been pounding the table on is small cap. Okay, so small companies.
In the U.S.?
In the U.S.
Okay.
So the big one there is IWM. And the thesis on small cap is they got very cheap valuations, so they're not expensive like all the tech stocks. Secondly, we've got lower interest rates. Those help small caps. And small companies benefit from Trump. Deregulations, cutting corporate tax rates. I just last week talked about the small business sentiment indicator. It's had the biggest increase since Trump was elected. Small businesses are feeling really good about the outlook with Trump. So to your point, let's stay overweight U.S., but let's look to other areas. So one would be U.S. small cap, and then another area I like is value. I like value over growth right now. You're not getting the big concentration of the tech stocks. In the value ETFs, you get a lot of energy, you get financials. I think the financials could be one of the bigger winners with a Trump presidency. With the deregulation. So that's where we're going. Some of the other alternative areas than just your S&P or tech stocks.
And is it two parts of the same story? Like with financials, do you like more regional banks that would be smaller in nature than those big money center banks?
I like them both.
Okay.
The deregulations that I'm anticipating, look, they have the new Commerce Secretary, used to be the CEO of Cantor Fitzgerald.
Right.
He's going to be pushing pretty hard for deregulations within the sector. So I think financials, the banks, will all benefit. But regionals might stand to benefit a little bit more. And if you do get a pickup of the economy, the regionals could look a little bit better. But I would say broadly the financials on a Trump victory.
And on this subject of value versus growth, are there any metrics, things that sort of identify to you that this represents a value, whether it's what you see and how the stock is performing or just the kind of business that makes it a little bit different than, I don't know, a growth name?
Well, I think of three things when I'm doing this. I think just you're looking at valuations. You're looking at PEs, price to book of these broad areas. Secondly, you then want to look under the hood of these different indices or ETFs is what's that sector composition. Okay, so right now I'm a little bit worried of the S&P is trading at 23 times. Price to book is 5 times. That's a really high valuation. So let's look at these other areas. And by the way, I like some of these sectors. So there's a couple levels. And then finally would be technicals. And truth be told, the growth, the tech stocks are still looking really good technically. But those are some of the factors that I would be looking at.
And because, you keep a very close eye on ETFs as investment vehicles, you can put all that together to sort of make more of an all-in call on value versus growth through different investment products.
That's exactly right. Okay. And the other thing with ETFs is just there's thousands of them. And you can get small cap growth, you can get small cap value. There's all these different areas. And so we really look macro to determine our allocations, and then we start looking into all the ETFs and which one's going to be best to hit that macro theme.
Okay. Well, we've covered a lot of ground, but there is one